let me get started on the Secretary's comments on the dollar, because he's saying now that they don't intend to intervene right now. But even if the U.S. were to directly get into the currency markets, how effective would it truly be when it comes to the president's concerns about a stronger dollar and everybody else undervaluing their currencies?
No, I think that's the right question to ask. There's good reason why Secretary Mnuchin calmed everyone down on this possibility, because that kind of intervention is unlikely to succeed. Even if the Fed were to go in on this, which they shouldn't, but even if they did, you're still only talking about a total reserve pool of well under 200 billion, and daily turnover in the Treasury markets, in the foreign exchange markets, is $5 trillion. So it's not going to work. And if President Trump keeps attacking Asian countries, including China, with tariffs, then he's going to keep driving up the dollar anyway.
And Adam, Secretary Mnuchin also not putting an exact date when it comes to the next negotiations with China, not even confirming that those meetings in September will take place. We know that those additional tariffs are coming up on Sunday. We have talked extensively about the direct impact of what these tariffs would mean for the U.S. economy. What about the indirect impact? Because I know that you have extensive research on perhaps all of this making the U.S. a less attractive place for foreign investors.
Thank you for referring to that, and that is something I and my colleagues at Peterson have been looking at. That if you see people doing flights to other currencies, not just the U.S. dollar, when there's trouble, and that's going to increase. You see foreign direct investment into the U.S. declining, and that's even before they started blocking Chinese investment more directly. You're going to see technology flows and access to markets go down, and so proportionally people are going to have less reason to invest in the U.S. It's kind of analogous to Brexit. I mean, it's not as exact, but you want access to markets. That's part of why you invest in a place. It used to be that having a U.S. base was a great place from which to export, and that's less true now because of the interventions of the Trump administration.
Yeah, Adam, way back at the start of the Trump administration, the president said the trade was easy to win. So I just wonder, in your estimation, who is winning? Because we have some work here from Bloomberg Economics analysing 700,000 data points to try and figure that out. And Bloomberg Economics has got China slightly in front at the moment, because for US buyers, replacing made-in-China products is not easy. I just wonder what your estimation is.
Well, my view for a while now has been that the trade war is Trump's Afghanistan. It's open-ended, it's costly, it's fruitless, and there is no clear victory. He doesn't know what winning would mean. He can't tell anybody what winning would mean because he's got no coherent strategy to do it. So like Afghanistan, now that we're in, it may take us, unfortunately, a long while to get out. It'll cost the U.S. blood and treasure. But the win-win, I mean, I respect your colleagues at Bloomberg for doing that kind of intensive data work, but I wouldn't frame it as who's winning. I mean, both the U.S. and China are losing. And a few other countries like Vietnam, very small countries, are picking up some trade diversion from U.S. and China. So they may, in some sense, win. But generally, the environment for emerging markets is going to get worse if it becomes political, whether you align, with China or U.S. So most people are losing, frankly, including both U.S. and China.